Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is November 10th, 2012. Our newsletter is for your informational purpose only. We're not responsible for your gains or losses. Let's look at current market trend and strategy. US stock market remains in correction phase. Major indices broke down 200-day moving average. It is very bearish. What to do in this market? Build up a watch list for both long and short. Wait for the market to turn around before long any stock. You may short the stock if you know how to time it. Let's take a look at US stock indices charts, all kinds of index charts. First of all is a NASDAQ index daily chart. NASDAQ has broke down 200-day moving average with a high volume, and on Friday it tried to rebound, but volume is really low, and that is a very bearish sign. SP 500 also came down to 200-day moving average. On the down days, volume is really high. That is the institution selling, so market is bearish. Gold index, gold almost touched 200-day moving average and then rebound. Now it comes close to 50-day moving average, and it seems like it's gonna hit the resistance on the 50-day moving average. Silver also rebound from 200-day moving average. US dollar seems rebounding for short term. This bow tie, moving average form a bow tie is going up. I'd like to share with you the US presidential election affected sectors. It benefit hospital sector. The stocks like THC, it's gonna be benefit because currently a lot of people don't have medical care insurance, and when they go to hospital for emergency, and a lot of times hospital cannot collect the money from them. But in the future, the hospital can get money from the government, which of course essentially comes from a taxpayer. But whatever, the hospital can be benefit from this change in healthcare plan. Well, the sectors get hurt, and obviously the energy sector, especially the coal sector, will be hurt, and military defense sector will be hurt, and pharmaceutical companies will be hurt. I'd like to share with you the watch list. And one is for the stocks that's still holding up or they're building a base. And we have to wait for the market to finish correction before aggressively long stock. Another list is for stocks that have broken down. Absolutely, you should avoid holding on to those stocks. AME, this stock is still holding up. AOS holding up, still in the uptrend. ARMH, this is a weekly chart, and this is significant. Look at this chart. The stock is making a flat base for 2 years, and the recent earning and broke out from this flat base. That broke out happened about 3 weeks ago, around $30. And this is a chart. It broke out on the day when they report earning. It was a big gap up, and this stock has a very good patent. They have lots of patents in the mobile technology, so this stock deserve to be on the watch list. CHS is making a flat base. Comcast remain on 50-day moving average, above 50-day moving average, so it's in the uptrend. CVLT, this has broken out, now it's pulling back, and breakout volume is kind of high. 3D printing, DDD, and they broke out from a cup shape and then pull back and reverse back up. So this worth of watching. DVA is still on the uptrend. FLT on the uptrend. Lumber liquidator LL is still on the uptrend. PII above 50-day moving average on the uptrend. POL and broke out with high volume, and it's very extended now, but it's on the uptrend. QIHU, this is a Baidu's competitor, a Chinese internet searching stock, and this is above 200-day moving average, and it's very volatile. RNF is above 50-day moving average. It's on the uptrend. Starbucks weekly chart, and Starbucks has made kind of like a double bottom on the weekly chart, and it deserves to watch. If they can decisively break out from this area, then it can start uptrend. SLCA, this stock is a new IPO stock, not long ago. It's within a year. Deserve to watch. SLW, and it's making a flat base. TDG is making a flat base here. THC, and this is this broke out on the presidential election day, but the cup pattern is very short. It's a high risk here. THO, this is also an uptrend stock, but a very extended. Visa remain on the uptrend. WPI remains on the uptrend, but it's kind of risky because the recent high 90 hit the high of $90 and quickly reverse on the same day. That usually is not a good sign. Downtrend. Stocks on the downtrend. Apple, definitely downtrend. AGU, downtrend. Gap down, very high volume. ALGN, downtrend. Alexion Pharmaceutical, sliding down, slide through 50-day moving average without any support. Amazon, below 50-day moving average, very bearish. Baidu has been in the downtrend for a long time. Baojing is also broke down 50-day moving average, slice through 50-day moving average with a high volume. This is bearish. BJRI, very bearish. CAT, again bearish. CEB, really scary, fall very quickly and with a very high volume. Celgene is also breakdown. CF, downtrend. Checkpoint, downtrend. Chipito Mexican Growth, CMG, this stock is pretty much dead, and the gap down a lot, and every time rebound and came down again. Cirrus Logic came down with a very high volume. EQIX, downtrend. Facebook, downtrend. GNC, downtrend. Google, and slice through 50-day moving average with a very high volume. It's very bearish. IACI, slice through 50-day moving average with a huge volume and downtrend. Lulu, downtrend. MasterCard, it's still above 50-day moving average, but the recent high did not go above the previous high, so it came down. So it's risky. Mellanox and gap down and hit the 200-day moving average, rebound. Perhaps it's making a base, but for now it's to be avoided. Monster Beverage, downtrend. Priceline.com, gap up but couldn't hold the gap and came down again. This is risky. Riverbed Technology, gap down. Select Comfort, SCSS, downtrend. Six Flag, a huge down day with a huge volume. SSYS is also very risky. It breaks down 50-day moving average with a high volume, although it rebounded, but the rebound volume is low. SWI below 50-day moving average, downtrend. AT&T is also in a downtrend. TCBI broke down 50-day moving average, very risky. TSCO, it hit the 200-day moving average. Looks like it's rebound, but volume is pathetic. It's kind of risky. VRSN gap down with huge volume. Rebound hit 200-day moving average. It looks like it's gonna hit it resistance. VRX downtrend. Whole Food gap down with a high volume. Very risky. All right, that's all for this week. See you next week.